A key aspect to being successful in real estate development really starts with a solid acquisition. And the complexities that exist in real estate development when acquiring properties is a little bit different than, say, an income-producing property, because at the end of the day, it's just a piece of land. And the ability to see what that land can be and what you can approve and build and what that can yield is something that requires a lot of specific expertise that we feel we bring to the table.
When it comes to deal flow, everybody, whether you're in real estate development or any facet of private equity, deal flow becomes one of the most important things. How do you make sure that you're seeing and getting to participate in the best opportunities?
Our ability to access what we think are some of the best opportunities in development stems from a long history of being successful in doing what we're doing. What I mean by that is, 15 plus years ago when we started, we didn't have a reputation, we didn't have the same access to opportunities. And as you get bigger and bigger, the networks of people that bring these deals, brokers, bankers, landowners, have come and brought us opportunities. And we're lucky enough now that we not only have the deal flow that is directly as a result of our relationships, but because we have 15 or 20 of the biggest development partners in the space, we get to see a lot of the things that they see. And for that gives us scale that doesn't matter who you are in terms of access to opportunities. Having 15 or 20 organizations giving you deal flow access is really unparalleled in this business.
At Greybrook, and different than many other organizations, the underwriting team and the asset management team are one. The same group of people working with the details, working with the developers, living and breathing the changes in the market and the changing realities of regulation, et cetera, are implementing that knowledge on a real-time basis into the process of evaluating whether a project is worth doing or not.
Understanding the downside risk is as important as understanding the upside potential. It's our job as asset managers to understand the risk fully, not go into any transaction or any acquisition without eyes wide open and fully identified as well as assessed and sensitized all of these risks to ensure that we know what we're getting ourselves into.
Among the things that we consider in our acquisition, there are several factors, but among the most important factors are things like entitlement. We don't like to buy things that are designated, for example, as a farm, to try to convert it to a high-rise development. We like to buy things that are already contained within the plan that a municipality has. The second thing would be managing our leverage. When we acquire something, we don't like to acquire it with a very little bit of equity and having a lot of debt on the property, because we believe that if time doesn't work in your favor, you're going to get yourself in trouble with too much debt. So we like to manage our leverage. And then lastly, it all comes down to the structure of your acquisition. So not only the structure opposite the vendor, but the joint venture that you establish with your developer partner, and having the decision making and having the key influences over the various important aspects of a development. And that allows you to put yourself in a defensive posture when needed, and it allows you to take advantage of the opportunities as they present themselves. We like to look at the market today. We're not trying to think too far ahead into the future, and we're trying to make things work as they are and as they exist today. So when we buy our land, we have to make sure that we're buying it within reasonable metrics based on the reality of today's market, not necessarily banking on future appreciation. So really the acquisition is what underpins our ability to be successful going forward. And that's really how you put yourself in the most defensive position, because one thing you can't control, as much as people like to think they can, is the market.